I'm Lauren Cohen. I am a cross-border lawyer and realtor and real estate investment expert, and I help people invest in real estate and get visas through real estate acquisition. And I am not a securities lawyer, but I know enough about securities law to be dangerous. I did some research just to make sure. I've done a lot of EB-5. EB-5 is a program where you basically invest in a US project and get a green card through passive investment. It's like it is an investment in a security. That involves very, very, very sophisticated documentation. And what we're dealing with, for the most part, with are people that want to raise a little money from their friends and family, or want to do joint ventures with multiple people, or think that they're going to be syndicators and don't know how to do it, and think that because they're in Canada, they're not subject to US securities laws. So we're here to kind of dispel some of those myths and go through as much information as possible. And if I'm able to help you guys to clear some air, that would be great. Now, I think that so many people do this the wrong way and don't realize how simple and really not expensive or inexpensive it is to do it the right way. And so you start raising money, and once you get into the weeds a little bit, and maybe your project is not as successful as you had hoped, and somebody gets upset, they're going to sue. And in the US, you know what that means. So the Securities Act in the US was introduced in 1933, which is probably around the time of the Great Depression. And there was a lot of people trying to raise money through different means. And basically it covers everything that is security. Now, what the heck is a security? What do you care what a security is, right? Why is it relevant? Well, people don't understand, most people, that anytime that you exchange money for a good or a service, that's a security. Because if you're not exchanging money for money, certainly there's potential of a contract, but it becomes a security because you're investing in something and getting some kind of an interest in that thing. And that interest is a security. You can call a duck, but it's going to still be a duck, okay? So at the end of the day, anytime that you're investing in a project with multiple investors, or even with one or two other investors, that there's a potential of it being labeled as a security and therefore being subject to US securities law. It applies to any capital raises for US projects. It's borderless. Violations are stiff, and non-compliance, and this is important, can lead to a piercing of the corporate veil. So what the heck does that mean? So people think, Canadians particularly, that by setting up a US entity, you are protected across the board, and you're not. There are certain instances not only where they'll pierce the corporate veil because you're violating securities laws, but also there's instances of fraud and all kinds of other things where they will pierce the corporate veil and go after you personally. So whatever your assets are, no matter where those assets are in the world, including your assets in Canada or anywhere, they will be subject to this claim, whatever the claim is. And that's important to understand too, because look, you think that maybe you're just risking the property or the project in question, but you're not. It can go way, way, way beyond that. And there's not a lot of areas of law that have this level of potential impact, but securities law does. It's very big. Any offer or sale of US securities must be either registered or taxed or exempt. Now, registered means that it goes through a registration. An exempt means like something like a private place memorandum, which is exempt from approval, but it still has to be prepared by securities attorneys so that all of the right disclosures and disclaimers and all that stuff that you need, the terms and conditions basically are in there. Because without those terms and conditions, who's responsible? You. And you don't want to be. Okay, it's the last thing that you want. What is an offer? Pretty much anything can be an offer of security. Almost on a daily basis, people saying, I have this project, I have that project, but can I raise money? Can I raise money? And I try to comment, but I can't give legal advice. And by the way, just to clarify, none of this is legal advice, okay? Because I'm just sharing information. The importance of working with qualified professionals and getting this done the right way. But the reality is, you're just putting yourself at risk for no reason. People want to save the couple of $1,000s. We can get this all done for you for like maybe $20,000 with a subscription agreement and the proper disclosures and disclaimers and everything like that. And then you can do this freely. You can go to accredited investors and potentially even non-accredited investors investors in certain circumstances. So why put yourself at risk? It's not worth it. Anything, as I said, can be a security. An investment contract can be a security, like a joint venture agreement, a promissory note. Even a promissory note can be a security. An investment contract involves an investment of money, potentially as a joint venture in a common enterprise with an expectation of profit from efforts of the promoter or the developer or the founder or the project manager or whatever. And let me tell you, their arms are far-reaching. They are going after you if they can. And there's something called a whistleblower law in the US. Well, what that means is, let's say Glenn sees somebody doing this and he's like, oh, they're doing this wrong. And he reports it to the US Securities and Exchange Commission, and there's a reward given. Glenn can get, I think it's up to 30% of the reward, just as a quote unquote finder's fee for being the whistleblower. So there's an incentive to report. These, how many of you are involved in these? Pretty much everybody. You have an LLC, right? Maybe you have an LP. You have shares of stock. You have passive investments. You are a syndicator, or you're investing in a syndication. Well, guess what? Those are securities, and they are subject to U.S. securities laws. A syndication, and this is from my favorite Black's Law Dictionary, which is like this thing. I still have my copy from law school, is organizing a group for a common purpose to promote a common interest or to carry out a particular business transaction. That's a joint venture, right? Right there. Pretty much all of these things that we see in the group could potentially fall into this category. A syndication versus a joint venture. So in a syndication, in a joint venture, there's an investment of money in a common enterprise with an expectation of profit, but the investors generate their own profits. So there's no passive investors in a joint venture. You're actively involved in developing the business. So if, like, let's say that Glenn and I develop a project together, okay? We're working on a flip together. We're doing whatever we're doing and we're working together. We're investing together. That's a joint venture. We are actively, let's say Glenn takes the role of hiring the contractors and I take the role of getting the title and all of this, okay? We're both having roles. And in an LLC operating agreement, you can define those roles, or you can define them in a joint venture agreement. But if Glenn is doing everything and all I'm doing is giving him money, like he said, that's not a joint venture. The other problem is, and this is something that's really, really important, okay? People try to work around this by doing loans with a promissory note. But I just said that could potentially be considered a security as well. So if it walks like a duck and it talks like a duck, it's a duck, okay? Just remember, as I always say, as I learned from my first day of law school, you can't do indirectly what you can't do directly. So don't try to work around the system because you think that you can. You can't. And you're gonna get in trouble eventually. You may get away with it initially, but you're going to get in trouble eventually, okay? And even these things, raising money from passive investors, selling LLC interest to passive investors, repeatedly borrowing private money. So to follow securities laws means that you either register the offering, or you choose an exemption, or you document your compliance with all of the elements. So compliance and making sure that you document the steps toward compliance are essential, because if there is a claim, at least you can defend it, okay? There are many securities exemptions, and we have to bring on our securities law team to figure out what the exemptions are, how you can make sure that you meet those exemptions and satisfy those exemptions, and that you don't end up violating them, and you have to disclose all the risks. That's so important. Disclosure, disclosure, disclosure. To be an accredited investor, you have to have $1 million net worth, 200,000 individual income, or 300 if it's a couple, okay? And that's how an investor could potentially qualify as an accredited investor. Now, this is securities exemption tables, which I can also share if you guys want. It's just all legal stuff. You know, what has to happen. There is no dollar limit on any securities exemption, just so you know. And the relationships are defined by, if you want to pursue an exemption, you have to have a pre-existing relationship and a substantive analysis of the person's status as an accredited investor. You have to be competent, trustworthy, and likable to be a successful syndicator, because you are raising money. And then for non-U.S. investors, and this is important, it applies to non-U.S. persons not living in the U.S., wiring funds from outside of the U.S. You may well qualify for a Reg S exemption, but how are you going to know that if you don't have the right documents prepared and you aren't consulting with a securities lawyer? This slide is really important for you guys, okay, for Canadians. Securities laws laws in as I mentioned, in Canada, in each province, corporate structures that minimize double taxation. All of you should be consulting with, whether it's me or Ali or both of us and our teams, to make sure that you're avoiding that double taxation and legal liability in the process, and investing strategies that minimize taxes for non-US persons. A securities offering involves all of these things, all of these elements: a PPM or disclosure document. PPM is a private place memorandum, an operating or limited partnership agreement, or sometimes both, a subscription agreement, an investment summary, which is a lot of the disclosures, securities notice, and property information. Now, would you want to do all of these things on your own? Because I sure as heck would not. I will be honest with you, okay? Look, I didn't do my own green card. And when you're preparing your own documents, it's always best to have a third party be involved, no matter how much of an expert. If I was the best securities attorney in the world, I would still have a third party securities attorney review my documents. Structured deals with investors, as I mentioned, you can do a joint venture, syndication, and you can earn money in a syndication in various ways, okay? Acquisition, asset management, refinancing, carried interest or cash flow, share of sales proceeds, and real estate commissions or property management fees. And all of these things are available to you as a syndicator if you follow the rules. So go back to following the rules, please. The best way is hello@investingacrossborders.net. hello@investingacrossborders.net. Everything is branded around Investing Across Borders on LinkedIn, on Facebook. We are doing a series of information sessions. We'll always doing regular events, and it would be our pleasure to help you and guide you through this quagmire of legal stuff.